Welcome to another Agrivisions program brought to you by First Dakota National Bank. I'm the host, Nate Franzén, President of Ag Banking at First Dakota. I'm really happy today to have with us Ryan Leischner from Statewide Ag Insurance. Ryan, we know the farm programs at your FSA office can be a confusing process for producers to figure out what's best for them. Do you guys play a role in helping them along the way?
Oh, heck yes, we do. Yeah, no, we've been getting a lot of phone calls here as of late. Customers asking us, what program should I elect? And really, in my mind, there's two choices. Okay. Obviously, there's three choices, but in my mind this year there's two, unless you're purchasing SCO or want to buy up with SCO. Because if you do choose to buy SCO, you have to elect PLC. Okay. It's required. So if you're not buying SCO, then in my mind, the decision is ARC County, ARC Individual.
Gotcha.
PLC, it's like it sounds, price loss coverage.
Yep.
So we have to fall below our marketing year average price of the established price of $3.70 on corn and $9.70 on soybeans. Yeah. I don't think that's going to happen to you.
Seems like a long shot.
Yeah, I'd agree.
Something really catastrophic is going to happen if we're going to see that.
Yep. So ARC County or ARC Individual, it's going to take this year's yields into play. Yeah. So ARC County, if it's a county-wide disaster, it could trigger a payment for the producer. Yeah. ARC Individual kind of operates the same way, but it's individual yields that are going to determine that payment.
And a lot of the things that go into determining those payments are the same things that go into determining payments on the revenue coverage.
Exactly.
Right? So you're gathering the needed information they're going to need for either program.
Yep.
So there is some synergy there that
Absolutely.
Makes a lot of sense for you to help them kind of maneuver and work through those things with the USDA. So Ryan, once everybody gets their standard policy in place going into the crop year, as they get into the crop year, is there other coverages and things that they should be thinking about with their policies and their risk management?
Oh, absolutely. Hail insurance is a big deal for a lot of customers. If they're at risk for hail, if their crop is looking really good, a lot of revenue out there. They might not have enough coverage, if their crop is growing and looking really good. Yep. Maybe look at adding some hail to it. And there's different things you can add with your hail, especially on corn. It would be like green snap, wind coverage. It's been a big deal the last couple of years with poor stock quality and ears hitting the ground and losing bushels that way.
Any timelines or things that producers out there need to be thinking about as it relates to those coverages?
Each company is a little different, but typically the end of June is where we have to have wind coverage on by.
Okay. And I know it's a ways out further yet as far as deadlines, but rainfall coverage, have you wrote much of that in the last few years? And how does that policy work? How's that?
Pasture, rangeland, and forage, it's been a huge deal the last couple of years, especially this year coming out of a drought. Guys, are going to want to protect their grass and their livelihood that way. So how pasture, rangeland, and forage works is the grass you're looking to insure, or alfalfa, it's sitting in a grid, and it's about the size of a township. So there's different weather stations out there that record how much moisture comes in. It could be snow, it could be actual rain. Okay. Each month or each interval is a 2-month interval. You have to select at least 2 of them. Okay. You have to select at least 3 of them. Okay. So you select your intervals, and each interval has a predetermined amount of expected precipitation. Okay. So if you choose your coverage level, just like crop insurance, and if that actual rainfall that you get or moisture you get comes in below there, the policy is going to start paying. Okay. So we can look back historically and see, which intervals have historically paid for people. This policy, typically if you look at a producer's grid, it's going to pay. These policies year after year, if you're sticking in it for 20 years, you're going to be money well ahead.
Yeah, good. And in a place like South Dakota, where we know there's
so volatile,
a lot of weather volatility, it's another risk tool in the tool belt.
Yes, definitely.